Hey traders, checking in on the stock market today. So some whipsaw action the last 2 days, but bears coming out again today to prove that they mean business, at least in the short term. We're going to be looking at the major sectors that were impacted, the bullish sector that is completely ignoring the weakness, and the cryptocurrency space seeing a bit of weakness as well as the dollar is on the verge of a breakout. So starting off with SPY, we can see definitely the most consolidation we've seen recently, but the bulls are still holding the daily EMA 12 as they have been for the last 3 weeks. So there was definitely a bounce mixed in there, but we can see volatility is increasing as we saw very little volatility back in mid-August. I guess we're still in mid-August. Back last week and the week before, each daily candle, very little range. And then you see the range of today, much more significant. So we zoom into the hourly, we can see we had a big hourly bounce from the low of the day into the close. A little bit of weakness after hours right now, but as we know, if the bulls are going to prove they're back in control, we have to see a confirmed hourly trend change back to the bulls. We are not seeing fear in the broader market right now because some of our major sectors are holding on just fine. And really, it's just XLV, healthcare, is a shining star. 4 days in a row closing at the high of the day. All-time high yesterday, big follow through today. So if one of our major 3 sectors is surging in all-time highs, even though the financial sector is consolidating and QQQ and tech is consolidating, we know that SPY can hold on well if this is taking place. So it's not the bear signal that I'm looking for, which is all of our major sectors at the low of the day at the same time. That's when I go aggressive as a bear, and that's not happening right now. But it is notable to me that we're seeing QQQ and XLF starting to correlate to each other. They have been inverse to each other for a significant amount of time over the past few weeks, where one's going up and the other's consolidating and vice versa. But the last 2 days and all of this week, we are not seeing that as strong as it has been. And we're seeing them both at the low of the day at times and then both bouncing at times. So there's a correlation shift that is in the air this week as we are consolidating. And bigger picture, as we're watching all of these markets, we're watching the dollar, we're watching crypto, because we want to know, where is money shifting around to? Is there fear entering markets right now? And we have a very key dollar resistance test approaching. So we have our double top at 93.19 right now. We failed to break resistance. We pulled back for a daily higher low. It was a bit more pullback than the bulls wanted to see to call it a bull flag. But after today's green candle, we're right back testing that resistance level. And if it breaks, it is a weekly cup and handle. Inability to break resistance. Again, the number one reason it's not a cup and handle when someone asks me is because the right side is higher than the left. The right side has to be lower than the left, and then it has to be a bull flag. So the weekly time frame, if we break 319, make that 93.19 and 93.44, it's a weekly cup and handle confirming. And then it is a confirmed monthly trend change as well. So with that, we can be looking for the potential of markets to consolidate. Or I should say, markets consolidating could be a potential catalyst for the dollar to break out in this range. Just looking at the cryptocurrency space, we just saw Bitcoin, which has been on a monster run the last month. Since finding our base of support, we ran up 65%. But we just confirmed a 4-hour downtrend, and the daily time frame is looking a little bit toppy. Bulls are just looking a little tired. So keeping an eye on that sector, keeping an eye on the Nasdaq, and again, the Nasdaq whipsaw of just fear yesterday morning, V-shaped bounce, broke the low of yesterday, and then a bounce into the end of the day, which is a potential hourly bear flag. What I'm watching for the rest of the week on the Nasdaq futures chart is this hourly downtrending support line because of how many touches it has. Lots of touches. 1, 2, 3, 4, 5, 6. So that's key. And we also have this resistance. It's broadening a bit here. But from the all-time high, and we can see the bounce from yesterday ended up just double topping at this resistance. But I like this hourly time frame. We can zoom in and condense it to the 4-hour chart. And I'm just watching this declining megaphone in the short term. And it will be very notable to me if tomorrow the bears can prove breaking this downtrending support line. If we don't break that downtrending support line, we're going to be watching for the bulls to attempt an hourly trend change back in their favor. So that's going to be a key downtrending support level for me for the rest of the week, or until it breaks, until we get either a bull break or a bear break. So looking at QQQ on the daily chart, again, daily downtrend confirmed yesterday, and we lacked follow through. We broke the low of yesterday today, but we're still lacking follow through. So it is still keeping a weekly bull flag alive. And the bears need follow through, and to get that follow through, they got to break that downtrending support line on the futures chart. As far as growth names are concerned, IWM is a decent ETF to be watching as far as a broader gauge of what growth is doing. I personally prefer to just zoom into the individual sectors, which we'll do in just a second here. But a second gap down open in a row on IWM, but also a solid bounce, almost back to the high of the day. The bulls will have to prove it with an hourly trend change tomorrow, but this is IWM doing everything they can to try and hold a weekly higher low here. And that key support is 209.05. So this is a potential pretty important rest of the month here, shaping up as we head into the end of the year, just in terms of whether or not we're shaping up for monthly consolidation, or can bulls continue their all-time high slow grind up. And right now is when bears need to prove it. And a dollar breakout and a loss of some key support levels on daily time frames in these sectors will be very notable to me. Bears still have some proving to do, but they did get my attention today just by retracing that whole big bounce from yesterday. Yesterday was business as usual, bulls buying the dip, nothing to worry about again. But today was bears saying, nah, we're still around here. And on the VIX, we're watching this long, drawn-out falling wedge on the weekly time frame. We could still easily stay within this for another few weeks, but I do believe that this pattern will break bull and will see monthly consolidation on SPY. But again, that could happen in a week, or it could happen in 2 months. So I don't have any confidence as to when it's going to happen, but I am confident that it will likely break bullish into SPY monthly consolidation, knowing that SPY has not consolidated on the monthly time frame in the last 9 months or so. We're due, you could say. So the other growth sectors, looking at TAN, we can see another gap down open, and again, a little bit of a bounce, a little bit of a lower wick, but not very significant. The biotech sector had a solid bounce. They closed strong, so they're in the growth space. ARKK, bounce there. PLTR, not much of a bounce. So there was growth bounce out there. NIO had a nice bounce on the gap down open. I just uploaded a live trade review on NIO to our YouTube channel. Check that out after this video if you're interested. Financial sector, still trying to hold daily EMA 12, but we double topped. We failed to break the high of yesterday by 2 pennies, and the bulls must confirm the hourly trend change if we're going to set a daily higher low. So both XLF and SPY, we're watching for hourly trend changes to try and shape up for daily higher lows. And if we see a low of today break tomorrow with continued hourly downtrend, again, it's going to stand out to us the shifting environment that is taking place over the past couple of days. Gold, starting daily consolidation, potentially. We did lose the 4-hour uptrend, and bulls are pleased with how well they're holding up, considering the dollar had a big green day today. But after this significant of a bounce, and knowing anything under 1830s is just a lower high, we are watching for the potential of gold to see daily consolidation, and there's lots of space for bulls that missed the initial bounce. Bulls are going to be watching for a daily higher low entry attempt next time we consolidate. And myself included, I will be interested in scouting a gold daily higher low. But we have to lose the pattern of a higher low every day before daily consolidation gets going. We've got a major flood going here. Tropical storm sitting over top us. Check out that trade review video. Don't forget to do good things, and we will check back in tomorrow and see if these hourly trends change to the bulls, or if we get hourly lower highs and lower lows, with bears continuing to prove short-term control. So this is a bitter melon. It's an Asian watermelon, and we're gonna cut it open and check it out. It's got medicinal properties. So then you clear out the white stuff and you put some salt on you chop it up, put salt on it, let it soak, or sit in the salt, and it gets less bitter. And then you just stir fry it, and it's a savory, celery-like thing. I've actually never eaten it that way. I always wait till it gets over ripe, and then these seeds become these red little goo balls, and they're sweet, and I like those. But we're gonna try stir frying it.